right, now today we're going to be talking about the Pro Pivot Indicator version 22.5. This is the version we're going to be going with for a while, so I wanted to make sure that I did a fresh set of videos that we can utilize as our tutorials moving forward. For those that are new to the Pro Pivot Indicator, we're going to start with everything that you see here in the first video. The second video, we're going to talk about everything that you see here. Third, we're going to talk about everything that you see here. And then we're going to make a few more videos following this point in order to really just talk about utilization. The Pro Pivot Indicator playlist that you're going to see here, this is going to be updated on a regular basis with videos from our live stream where we actually take trades utilizing the Pro Pivot Indicator. And that way you can check back on those trades and see how they played out. Okay? So look forward to that as well. Now, so for starters, you can type in any symbol that you want here. You see we have the SPY pulled up. All right. You can pull up the QQQ. You can pull up IWM. You can pull up Apple. All right. Nice and quick data, right? You pull up NVIDIA. Doesn't matter who you want to pull up. You pull them up and you're good to go. Now, once you type in a name, we're going to go back to SPY. Right? Once you type in a name, you're going to have in front of you what we call the pivot profile. All right. Now, the pivot profile is essentially the current state of whatever you're looking at, whether it's bullish, bearish, showing momentum to the upside, showing momentum to the downside, so on and so forth, right? It lets you know the current state of whatever you're looking to trade. Okay. Now, the pivot profile is designed to only let us change a few things so that way we don't mess anything up. So, for example, if I accidentally did this, right? Well, it'll say heads up. You're trying to edit part of the sheet that shouldn't be changed accidentally. So you could always just hit cancel, right? And that's good to go. The only two things you really want to ever change are the symbol and the benchmark. Right here you see the benchmark. Okay? That you can change at any point in time whenever you feel like it. The benchmark is simply what we want to compare our stock or index to, right? We're using the Dow Jones because we tend to trade the SPY and the QQQ, so we don't want to use those as benchmarks. Otherwise, you won't get any signals for like the uptick in the pulse, right? It'll always be blank because, well, you're not really outperforming those elements if you are those elements, right? Now, moving on from that, let's get straight into how we use the Pro Pivot Indicator, starting with these elements here, okay? The first thing you're going to notice is your current price and your weekly pivot, okay? Now, the weekly pivot, for those that aren't familiar, we're talking about pivot points. Pivot points are essentially a set of support and resistance levels for a stock or an index that are based on prior periods, high, low, and close. So that can be a daily pivot, right? So we can be looking at yesterday's data, and that'll tell us all of our support and resistance levels for today, and it'll give us a bias. right? As well, we'll talk about that. Or we can be looking at last week or last month and so on and so forth. And so if we're looking at last week, it gives us a weekly bias. If we're looking at this week, so if we're looking at last week, it gives us a weekly bias. If we're looking at last month, it gives us a monthly bias, and it gives us all of our support and resistance levels, right? So now, when it comes down to the weekly pivot, this is a great level or a great set of levels to utilize as you come into a new week. You get to say, okay, well, we're starting off the week bullish, or we're starting off the week bearish. And then you have key levels above and below you that you can now utilize as support and resistance. Okay. So the weekly pivot is always going to be calculated for you. You don't have to do any work at all. When the current price is above the weekly pivot, this will be green. When the current price is below it, it'll be red. This makes it very easy to quickly identify, so that way you don't have to go, is it above? Is it not? It just lets you know right out the gate. And now, then you have your first resistance and your first support. From a weekly perspective, this is like saying if I have a bullish bias coming into the week, then my first point of resistance will be 650.22. This can also be used as my first target. If I happen to open at the weekly pivot, find support there, and start to push higher, I can then use this as my first target. Now, some people may also use the first resistance as a trigger for an upside move throughout the week. So, for example, if we close above the first resistance early on in the week, let's say Monday or Tuesday, then somebody may say, I'm going to look for my second target or third target throughout the week, right? These second and third targets here are your weekly second support and resistance. Okay. Now, if we open below the weekly pivot, we may look to see if we find resistance at the weekly pivot early, and we may start to come down, and we may look at the first support as our target. Or, as I said, some people may look at the first support as a trigger. If we break through the first support early on in the week, then we may take a position that targets the second or third support levels throughout the week. Right? Now, let's continue on from here. We have our standard range. This standard range is a unique formula that only exists here at the Equity Channel. We designed this particular we designed this particular element here in order to give us a true understanding of the range that this particular security may have. Right? It's a combination of standard deviations and average true range. As you can see here, the standard range is about $5.23. You can use this for many things. You can use it to set stop losses. You can use it to set take profits. You can use it to trigger entries. Right? Like let's say, for example, you wanted to say, hey, above the weekly pivot, I want to go one ATR above the weekly pivot, and that's when I'm going to get into this trade. Right? So at around $6.46, $646 or $647, I may take the entry, right? Because that's showing some momentum there. I can do that. But the standard range we also utilize for our support and resistance levels over here. We'll talk more about that in our next video. Okay. The 20-day high and low. Very, very important levels in trading. What these levels show us are some key levels that, have been utilized throughout time as, essentially breakout points for the market. We use these levels in many ways. One way could be as a breakout. So let's say on Monday, the market opened and we shot up to break a new 20-day high. Let's just say, for example, this is what happened. We may then start to either look at this as a potential bullish opportunity here, or we may start to look towards, different stocks or different sectors or industries that are driving this move higher as potential opportunities, right? Because remember, this represents the S&P 500. So if the S&P 500 hits a 20-day high, I may then say, let me look to see if there's any stocks that are likely to, right, continue their breakout. Or like I said, I may just trade the S&P 500 itself. Same goes for a 20-day low. Nothing different there. I may look for stocks that are, currently more bearish than others, or I may look to short the S&P 500 itself at that point. Now, we also use these to set trajectories. We'll talk about what that's about. It also ends up giving us our chandeliers and things of that nature. All right. But again, these are things that we'll talk about um, in our next video. All right. The last thing we pay attention on this end is the 200-day average. Now, this is a very, very important. This this is a very important level that we have here on this pivot profile. It's not just because it's a 200-day average, because we use this very specific trading strategy known as index tracking, right? And so, in that regard, what we like to do is like to take the 200-day average and use it as a tool for taking trades at the end of every month or holding trades at the end of every month, right? Now, granted, to make this very clear, we may use it for entries, but we won't always use it for exits. We can use various different things for exits, right? Standard deviations, support and resistance levels, standard range. We can use all kinds of different things for key levels. So let's keep that in mind. All right. But we use this as a bias at the end of every month. So we're closing above the 20-day moving average at the end of the month. We think of that as an opportunity to buy and hold the market. So you want to be long the market at that point. Now, um, there is a point at which you start to think, well, maybe it's a bad idea to be buying right now, and that point is when you're too far above it. This number here tells you how high above the 200-day moving average you are. Currently, we're 8.5% above the 200-day moving average. May not seem very extreme, but it is, slightly above average, right? Either way, what we want to do here is we want to use this as an idea starter, right? If we're closing above the 200-day average at the end of the month, we want to look for that first long opportunity to take the entry, and we'll use that as a bias until we're proven wrong. So we're going to look at this once a month, right? So let's say next month we're closing below this, then we're either going to be looking for short opportunities, or we're going to be, taking very short-term trades until such time as we're closing back above it at the end of the month, right? So that's everything for this particular side of the trade. You'll see us utilizing this all the time in our stream. We'll be live on Twitch. Definitely make sure you check us out. But at the end of the day, what I want you to take from this video is just the simple understanding of how these elements work. We'll be talking more about how to really utilize them together in other videos, and especially when we're live. I will be making sure that I record some of the trades that we're taking, win, lose, or draw. So I'll be uploading the videos without knowing whether we lost or not. Right? I'll only be uploading the videos based on the entries that we took, and you can go back and double check to see, did they lose that trade or did they win that trade? Okay, and we'll talk about that in the months and weeks to come. Right? Hope you enjoyed this video. Look forward to the next one. It'll be uploaded just shortly to talk about the support and resistance levels using standard deviations.